Our next speaker, Mr. Rambabu, has over 18 years of experience in wealth management, financial planning, asset allocation, portfolio construction, analysis of various companies across the world. Formerly, he worked as a manager at Standard and Poor's Global (S&P), where he handled the financial statements research and analysis team. He is a chartered financial analyst (CFA) from CFA Institute, Virginia, USA, Master of Financial Management (MFM) from Pondicherry University with aim to improve financial literacy. Rambabu talks about personal finance investments, trading in two YouTube channels, Ramwealth in Telugu and Fine Shopping in English. He will be speaking on iron butterfly option strategy with adjustments. This session will be moderated by Mr. Raghunath Reddy.
Welcome to EDECNOCH 2021, and today we have an esteemed guest who is going to talk about one of the main option strategy that is being used these days. So we thought we will invite people who are doing this kind of strategy in the live markets and let them share their experience with this strategy. So today we have Mr. Rambabu. He's a CFA. He has over 18 years of experience with wealth management, financial planning, asset allocation, portfolio construction, financial statement analysis of various companies across the world. So he formerly worked as a manager at Standard and Poor's Global, where he handled financial statements, research and analysis team. He is a CFA, which is a Chartered Financial Analyst from CFA Institute, Virginia. He has a master degree in financial management from Pondicherry University, and he is also MCOM from Andhra University as well as BCom from Andhra University. So he has a long list of degrees and is a very well qualified person in the financial field. And today he is going to share his experience in the trading as well. So Rambabu also talks about personal finance and investments and trading in his two YouTube channels, and that's how I came to know about Mr. Rambabu. He does a lot of trading videos on option strategies in Telugu language, and he's also now getting into the same, but in also in English language. So this Telugu channel is Ramwealth on YouTube, and his English channel is FinShoppe. He's now currently a founder and wealth advisor at Ram Fund Management. It's his own fund management. So welcome Rambabu, Mr. Rambabu, to EDECNOCH 2021 because this is totally online, and we are glad to have you on our platform. And I hope the viewers of this presentation will learn from you and from the strategies that you are going to show. And Mr. Rambabu, if you want to add something about yourself, please do so.
Yeah, thanks for introduction, Raghunath. Thank you so much for taking me for your conference. I hope whatever strategy I'm going to discuss today, hope people will like it and useful for them. So today I'm going to discuss about iron butterflies option strategy. So with that option strategy, most of you might know about it. Most of you may be already using it. So in this session, I'm going to discuss a altered or a modified iron butterfly strategy, as we are going to do some adjustments in addition to that plain vanilla iron butterfly strategy. Okay. So so as you know that, let us briefly discuss what is, for the sake of new people, let us briefly discuss what is iron butterfly, then we will move to presentation. Like, briefly, iron butterfly means at the money options, we are going to sell call and put options, okay? And at the out of the money, we are going to take some protection with both call and puts. Okay, I'll give you a simple example before we go to presentation. Assuming that Bank Nifty is at, we are going to anyway use Bank Nifty options for both explanation, and we are going to do this backtesting as well using OPSTRA simulator. Okay, so I'm giving Bank Nifty option as an example. Assuming that Bank Nifty at 36,000 now. Okay, so at 36,000 we may get 1,000 option premium for call and 1,000 option premium for put. If we take next month, we are in September, right? If we take next month October options, so we may get 1,000, 1,000 both sides. So we get 2,000 option premium, right? So with the selling options, we have to take protection also by going out of the money options. We have to buy somewhere around 38,000 call option, and we have to buy somewhere around 34,000 put option to take the protection. This is the plain vanilla strategy, right? So now let us go to presentation. In the entire presentation, I am going to explain from the point of view of altered or modified iron butterfly, because I'm going to explain that thing from here onwards. Okay, let us go to presentation. So in this slide, I gave a list of rules which we are required to follow, whatever strategy now today I'm going to explain you. So first point, anyway, we have discussed what is iron butterfly and how to construct it. And second point, market expectation. The strategy which I'm explaining now, for the entire month, we can expect 6 to 8% range of movement in the Bank Nifty. So we can able to manage this butterfly and end up with the profit. When we take weekly strategy, we can expect market range around 4 to 6%. Okay, that is about market range expectation for this strategy. And come to next point, time decay. As we are the net sellers in this strategy, at the middle of the at the money options we are selling, right? So we will become a net sellers. So as we are the net sellers, time decay would help us to end up in the profit in this strategy. So time decay is very much important point for this strategy. And come to next point, when and how to do adjustments. In iron butterfly strategy, plain vanilla strategy, we get two break-even points. At the upper hand, one break-even point, and at the downside, one break-even point. If market moves any of the direction, if market moves and reaches any of the break-even point, at that break-even point, we are required to take another iron butterfly. So that will be the adjustment for this iron butterfly. So that with this adjustment, what we get is we get the range benefit. For example, in the initial iron butterfly, in the original iron butterfly, we may get the range benefit of maybe 2,000 points. Okay, so by initiating additional iron butterfly at the break-even point of other side, when market reaches that point, we may get additional 1,000 points range from that break-even point. So that is the advantage of adding another iron butterfly. When market reaches to the break-even point, we can extend the break-even point by doing so. So how many times we can add new additional iron butterflies? I suggested based on our back testing and the real trades of the last 6 months, we have seen a lot of, we have checked the lot of different market scenarios where market moved violently. So based on those back testing and the live trades, I suggest two adjustments are required, are enough in addition to the original iron butterfly. Okay, basis of our adjustments would be price points and the break-even points. We don't rely on like option Greeks in this. We don't consider option Greeks. So we do adjustments based on the break-even points and the price points. And come to other rules, like I'm also giving profit booking targets and loss booking targets based on our back testing. So profit booking target will be 2000 to 3000. You can put as a profit booking target per single lot. For a single lot means in this strategy we for each strategy we require around 40,000 to 50,000 margin. So for that you can put a target of 2000 to 3000 target, and last booking target would be 4000 to 6000. I would suggest based on our back testing. And how many times? Yeah, I'm sorry. This point we already covered. How many times we are required to do adjustments. And the next point, maximum loss and maximum profit. As this strategy itself is a defined profit and defined loss strategy. So both profit and loss are defined. So you don't get any unlimited loss in this strategy. And this is also hedging based strategy, as you know, right? And this strategy especially, it works perfectly in the range bound scenario. Even when market moves in a single direction, we can cover up to, as I said, that if we take monthly options, we can cover up to 6 to 8%. In case of weekly options, we can cover up to 4 to 6%. And come to other important points about this strategy, when to avoid this strategy. So in based on any event, any local or global event, if markets are moving either downwards or upwards very steeply, so in that case, you would better to avoid this strategy. As we already discussed, this is a range bound or market neutral strategy, and this is kind of any unknown events are happened. And if you are expecting any known events would impact the market, for example, budgets and or else elections results, they may impact markets very hugely. Like markets may move 10% down or up after these results. If you are expecting that kind of results, avoid the strategy in that time. And other point is when markets are moving in a single direction, maybe more than 2,000 points or 3,000 points. I'm explaining these points based on the bank nifty. When markets are moving in a single direction like this within a couple of days or few days, in that case also, if you are already in positions, you would better to close your positions with limited losses. And if you are not in positions, you would better to wait till markets are settled down, then you can enter. So these are the points you have to avoid these strategy. Now let us now graphically understand how you can deploy this strategy and how you can adjust this strategy. I'm explaining with an hypothetical example. In this graph, you can see, right? You can see at 36,000, assuming that Bank Nifty is there at 36,000, uh, we have to sell both call and put at 36,000. We may get around 1,000 at call and 1,000 at put. Okay, so as I already said that you have to go away 2,000 points. You have to add these call and put premiums. We get 2,000 rupees, right? You have to go away 2,000 points upward. So it means you have to buy call at 38,000. We may buy at 300 rupees call there, right? And in the same way, you have to come down 2,000 points. So it means at 34,000, you may have to buy put option. It may be available at 300 rupees. Okay. So your break-even points will be somewhere around here 37,500. That is, you have to add these two buy options. It will be 600 rupees, right? You have to deduct 600 rupees from the 38,000. So your break-even point will come at 37,400. In the same way, at the downside, your break-even point will come at 34,600. So this is the basic original iron butterfly. Okay. For example, when market moves down and reaches this point, 34,600. So in this case, as I already said that you have to do adjustment. Okay. Next slide, we can see that. So here you can see this. So here again, you have to construct another iron butterfly. So while constructing this iron butterfly, maybe after a few days, call premium may be at around 800 rupees, put premium may be around 800 rupees. Okay, so you are getting 1600 rupees, these two premiums put together, right? So you have to again go away 1600 upward and downward, and you have to take both put and call. You have to buy both put and call. So same way how we have done in the original iron butterfly. So this is how we can adjust this iron butterfly. With this, we can actually extend our break-even point. This was our original break-even point, right? We can extend our break-even point further with this adjustment. We can do additional one more time also if market's still going down. So with this, what happens is our two break-even points will be extended so that we can stay in the market a bit longer time in our positions, and we may end up in case of market bounce back a bit, we can end up with profit also. Anyway, we can see those things in our in our back testing. After these adjustment, our graph maybe look like this, not as a cone mode. Okay. Now let us whatever backtesting I wanted to do. I just wanted to take a very violent week. I'm explaining backtesting with week uh, from April 29th to April 29th of 2021 to 6th of 6th of May. So in this week, what happened is I'm taking this candle end of the day price to uh, up to 3rd May. So up from 29th to 3rd May, markets moved down 1800 points. It means more than 5%. Okay, within 2 days. After that, so you can observe these candles, right? Markets opened gap down with very high percentage, and after that, again market moved up 1000 points. You can observe here by the end of the week, by the expiry of this week. So I'm taking this violent week where Bank Nifty is moved very violently and explaining this. I'm doing back testing so that you understand if we can able to adjust this week perfectly and end up with the profit, we can able to adjust, we can able to make profit in a normal weeks where Bank Nifty moves around 1000 points. We can easily end up with profit when Bank Nifty moves around 1000 points, 3 to 4%. Okay, now let us see back testing in option simulator. Here I have already selected May 6th week. Okay, so this week is started, and I have started my trade on 29th April. Okay, so I'll do this trade till 6th of May, that is the weekly expiry. Okay, so you can observe here. So I'll move till the end of the day on the 29th, and we start doing this trading, right? So usually I take end of the day while trading, so I'll explain the same way. So when I look at option chain in this after simulator 29th April, so we can see future price 33,700, even spot price also at 33,700, right? So we deploy the strategy at 33,700. So I'm deploying the strategy at 33,700. At 33,700, I'm required to sell one. I'm expanding with one lot. I'm required to sell one call option, and I'm required to sell one put option. Okay, so when you add up these two premiums, 660 plus 680, so it is more than 1300, right? Let us round off to 1300, and we are required to take protection 1300 points away from this point. Okay, so upside it would be 35,000, right? So at 35,000, I am buying one call. From the downside, it would be 34,000, 32,400, right? So I am taking protection here. So now let us look at our original iron butterfly. So original iron butterfly looks like this. Okay. So let us look at other metrics. You can see here maximum profit 22,700 and maximum loss 9,700. Profit loss ratio looks very good, right? So and you can also look at break-even points here. Sorry. You can also look at break-even points here. 32,791. For our explanation, let us rounding off it 32,800. Assume that, and upper break-even point would be 34,600. Okay, so around 1,800 range we are getting here, as it is a weekly option. When choose, when you back test monthly options and when you do live trade, you get more than this range in the monthly options. Okay, so now what we do is I'll just move 30 minutes in our back test. Just give me a moment. Yeah. Yeah, what I do is I'll just move 30 minutes. You can observe profit here or here, and you can also observe that the market is reaching these break-even points, as we are required to do adjustments at the break-even point. We already seen this week chart, right? So anyway, market will move steeply down, so we have to do some adjustments here, right? So what I do is I'll move 30 minutes. We can observe how profit and loss scenario would be. I'm just moving. It is 30th. We can see some little profit. 30th April, we can see little profit 300 rupees. I'm just moving 30 minutes. You can just observe. Market is moving down. We can see here already 980 profit. It means it is already, we only spent margin around 50,000, right? So on 50,000, it means it is already, we already got 2% profit. Anyway, we will move and see when market reaches downside break-even points, we are required to do adjustment. I think on 30th, market is still in middle. Now it is moving down. Yes, it's almost our break-even point, right? So when you check here, 32,900, our break-even point is there at 32,800. Still there is a gap. So let us move. Yeah, when market opened on 3rd, it is market is again opened with very huge gap down. You can see here our break-in point is there at 32,800, but market opened at 32,245. Around 500, more than 500 points gap is there from a break-even point. But these kind of scenarios may happen in the market, right? We may not get exact point to adjust, but in this point also we can do adjustment. But adjustments we don't do here in this at the break-even point, but we have to do where market is. So market is at 32,245, right? So now let us do adjustment here. I'm opening option chain. I'll take and I'll sell the options at 32,200. At 32,200, I'm selling one more call option and one more put option. Again, we need to add these two values, 535 and 592. So these two put together more than 1,300, right? Let us rounding up to 1,300. So 1,300 points away, you are required to take again protection. If we add 1,300 points to this, we will get 33,300, right? So let us go to 33,300 and take protection here. You are required to buy call here. Okay. So same way how we did original iron butterfly. So here when you deduct 1,300, 31. So let us sorry, I just missed here. So we are getting around 1100, right? Yeah, we are getting around 1100. We took away 1100 points protection, and in the below 1100 points away would be this one, 31,100. So now modified iron butterfly would would look like this. Okay, so we have two high points. If market end up at expiry, we get very huge profit like 13,000 here, and here we make get profit 7,000. If market end up in between, we may get like this 4,000 profit. Or if market moves down, we may have to adjust. Okay, let us see. Okay, and you can, very important point here, you can see these break-even points. Earlier break-even point was there at 32,800, right? Now a new break-even point in the downside is 31,840. It means around 1,000 points range benefit we got in the downside. So this is the benefit we got because of this adjustment, and uh, maximum loss also increased because we have taken another butterfly. Okay, now let us again move 30 minutes and see our profit loss scenario. Now present loss showing at around 3,000. Again I am moving 30 minutes. You can observe loss profit scenario. When market moves in middle, obviously loss will reduce. Let us see. I'm just moving. Please observe this profit point and this market. Yeah, when market is moving down, again our loss is getting increased. So we are now at third end of the day. Now we are on fourth when market opened. You can see that market in between middle of our break-even point, so we can see around 2,000 profit. Again, this is also an exit point for us because we have spent how much margin, around 1 lakh, right? For two iron butterflies. So we got 2,000 profit. It means 2% profit. Again, this can be another exit point for us. Even though market moved down 1,800 points and now it is reversing back, we are still in profit. Now I'm moving 30 minutes. You can observe profit or loss. Now we are end of the fourth. Again, market is going down. Yeah, we can again see some little bit loss at the end of fourth. Now we came to fifth. When market opened, again we could able to see some profit. Again on the fifth, market is again a little bit going down. We can see some little bit loss. Now again we are able to see profit. I'm quickly moving at the end of fifth. Yeah, at the end of the fifth, around 2 o'clock, we could able to see around 4,000 profit. Again, this is also exit point. We need not wait till expiry, right? So, but anyway, as this is example for us, we will do this testing till end of sixth. We could able to see 4,600, 4,500 profit also on the expiry day beginning. I'm just moving until the end of expiry day. As anyway, market is in between of these break-even points, we could able to see desired profit here. Yeah, this is the end of expiry day. So we could able to see around 4,000 profit. It means around 4 to 5% profit. We could able to see even this violent market week. So when by taking this adjustment, had we don't take this adjustment, I'm just showing you, if you don't adjust this, what would have happened? I just remove this and you could able to see, and remove this adjustment, you could able to see what would have happened for the earlier iron butterfly. So market here in this bottom of original break-even point, we are still in the profit, but we are in the 500 profit. But by doing this adjustment, our profit would have, we have increased to 4,000. So this is how we can able to manage this original iron butterfly, and we could able to handle the bank nifty using this iron butterfly. So that's it about this strategy. Yeah.
So first of all, Rambabu, thanks for sharing this strategy. It's a
Yeah.
very
Most welcome.
nicely explained on how
Yeah.
to do the adjustments, and you have made some very nice rules on
Yeah.
how far away you have to buy the hedging options, and
Yes.
what are the adjustment points. So the
Yeah.
rules are very clear
Yeah,
in
yeah.
this
These rules
strategy.
are very much required, mostly for the freshers who are doing first time,
Yes,
because when they don't know rules, when they see a little bit of loss, they may feel very nervous. That's why
yes.
these rules are very much required. Those who are doing first time.
Okay. So my question here is that uh, first of all, let's come to the margin requirement, for example. So
Yeah.
here you say it requires around 40,000 to 50,000,
Yes.
and in the adjustment, you are saying that you can add up to two more extra iron butterflies, right?
Yes. Yes.
So you need anywhere around 1.2 lakhs to 1.5 lakhs margin requirement,
Yes,
and
yes, yeah. While deploying this strategy, yes, you need to keep handy additional margin also. Additional margin also you are required to keep handy. Yes.
yes, and also some additional amount to handle any M2M losses. Because sometimes if it's very high, the
Yes.
M2M, sometimes the brokers can remove the position. So you have to have margin plus some handy amount in case of
No, as this is a hedging based strategy. Margin
okay,
requirements may not move much. It may
okay,
move 45,000 or 50,000. It may not much
move
change
much.
from the
Okay,
existing, as it's already hedging based strategy, right? Or
okay,
you already bought like put and call also, right? So your margin may not change much even though market moves.
okay. So roughly around 1.5 lakh is what you would say
Yes,
to
yes,
do this kind of strategy.
yes, exactly, exactly.
Okay, all right. So yeah, it's a very defined and limited risk strategy. So it's
Yeah.
very good for people who are new to this kind of option strategies, right?
Yes, yes, yes. Because they
Okay.
cannot handle unlimited risk, right? If loss
Yes.
also defined, they would be more comfortable. They can also learn with comfort.
Okay. Okay. And you have shown the Bank Nifty strategy here. And can
Yes.
this be done on Nifty as well with the similar rules?
Yeah, but yes, we can do in Nifty as well, but we may not get this much range in the Nifty. So
Okay.
we have back tested thoroughly in Bank Nifty only. But yes,
Okay.
we can do in Nifty as well, but we may not get this much range benefit in the Nifty. That's what defect in the Nifty.
Okay. All right. And this you do on both weeklies as well as monthlies?
Yes, yes, we can do both in weekly and monthly. Nowadays,
Okay.
why we are suggesting monthly only nowadays? Because as you know that VIX is very low, and because
Yes.
of VIX is very low, we are getting option premiums very less. So
Mm.
nowadays, I'm suggesting go for monthly, and you can do multiple times. For
Okay.
example, if you choose monthly options, you may do 3 times or 4 times also. Same strategy. Okay.
Mm.
What I suggest is when people are going monthly, I suggest at least 5 to 6 weeks prior you can implement this strategy. For example, when you are going to implement this strategy for October series, you can start implementing this strategy from the 15th of this September. So that's how you'll get very good premiums, and you can also get very good range. You may not need to do adjustments very quickly. If a bank nifty is there for 1 week within that range, you obviously end up in the profit.
Okay. And in
Without
weeklies,
adjustment also, we can end up with the profit most of the times actually.
okay. And when you start in the weeklies, and how many days before expiry do you start this strategy?
So weekly means every and on Thursday end
Thursday.
we can start.
Okay.
Thursday end we
Okay.
can start.
Okay.
We'll
So
use
around
entire week because weekly we have only less days, right?
yes, yes. So around 7 days before the
Yes,
expiry,
yes,
you start this strategy.
yes,
Okay.
yes.
Okay. So have you faced any scenario where you have to add at least the all the three iron butterflies? Have you faced this kind of scenario when you did this in live testing in your
Yes,
experience?
yes. In live testing we have faced this we have faced this, and we
Mhm.
end up with profit. I
Okay.
think in May it seems when I
Okay.
did.
Okay. And so you will do this strategy only as long as your stop loss is not hit on a per lot
Yes, yes.
basis. So if
Yes,
you're
on a
using
per
two
lot
lots,
basis, if my targeted loss hit or my target profit hit, I'll just close the strategy, and again, based on the current prices, I'll again initiate it.
okay. So for example, in the case where we have shown the simulation of the strategy,
Hmm.
you have added one extra iron butterfly. So
Yes,
there you have two lots. So in this
yes.
case, the stop loss should be increased from 4,000 to 8,000.
No, 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 no.
No.
So stop loss and profits targets, whatever we have said based on the back testing, I don't suggest they are increased based on the
Okay.
additional iron butterflies. They are still intact as suggested.
So they are always fixed from
Yes, yes,
4,000 to 6,000. So you should not
yes, exactly.
exceed.
Yes,
Even if you add additional
yes.
butterflies, it should
Ah,
always be 4,000 to 6,000, depending
yes,
on the risk appetite of the trader. Okay.
yes, yes.
All right. Okay. So one more question is, you said that you also tested this live. I mean, can you share like, what are the returns in general in your live testing?
Yeah, in general, I have targeted 2000 per lot. I think in June and July, I have seen very good profits because markets are in the range. Most of
Mhm.
the times, I ended up with 2000 profit. A few times I have adjusted one time. So I ended up with 2000 profit per lot. So I usually do multiple lots, but for explanation sake, we usually talk
Yes.
per lot basis.
All right. So you target anywhere around 4% to 5% based on the
Till
margin employed.
uh, yeah, when we end up with the single lot, so
Mm.
we obviously end up even though 2000 profit, we can, it would be 4%. When we deploy two times, it would be 2% in that case.
Okay. All right. All right. And do you have any other suggestions for the new traders who are coming into options market? Do you have any other suggestions on this iron butterfly option strategies apart from what you have showed?
So apart from iron butterfly, you're asking?
Yes, apart from iron butterfly strategy, are there any strategies that you
Yeah.
deploy that other people might use?
Yeah, for the newcomers especially, I would suggest that safer strategies like this iron butterfly and strangles and even iron condor, when they use these kind of safe strategies, they come to know how these both puts and calls exposure we get with these strategies, right? So they understand how when market moves, when VIX rises or VIX falls, they understand how these calls and puts are reacting, how these premiums are reacting. So I would suggest these kind of strangle, iron condor, and iron butterfly strategies. I would suggest these safer strategies for the newcomers.
Okay. All right. Uh, and in the iron butterfly, you have these rules.
Yeah.
Can this be also deployed in an iron condor kind of strategy? Like, adding the, same way.
No. We have other way doing. We are doing the adjustments for iron condor other way, but this kind of thing we didn't test actually. We tested
Okay.
these kind of adjustments for this iron butterfly.
All right. So do you feel that this iron butterfly strategy has more advantages than doing an iron condor strategy because you receive more premium in iron butterfly compared to a
Yes, yes,
iron
yes,
condor?
yes.
So that's the reason
Instead
you
of
chose.
yeah, when we compare these two, as you know that iron condor is safest strategy than this, but
Yeah.
profit potential is very high in this iron butterfly when you compare with iron condor. So it
Okay.
may be safer, but within a few days we can end up in the profit with this iron butterfly strategy. This is also giving a defined loss, right? This is also from the safety point of view. This is also an advantage, but from the returns point of view, this is very high advantage compared to iron condor.
Okay. Okay. So in your live testing, when you deployed this kind of strategy,
Hmm.
uh, I mean, did this strategy anytime hit a stop loss? I mean, did it
Yes.
happen recently?
Actually, I mean, to be frank, last week itself we
Okay.
hit the stop loss. I mean, when you observe last week, especially in,
Yeah.
I guess, uh,
Yeah.
uh,
It
the
went
markets
in
are
one way.
very violently moved up, right?
Yes.
There are a couple of reasons. Fed has, eased its interest rates, and um, our GDP numbers also came around
Yeah.
20% quarterly GDP number is there. So those positives moved markets very high, and you might have observed that continuously 2 3 days VIX is up more than 5 6 8% also. So when VIX is up, even though we have adjusted one time, but we have hit our, even though market is in the range, within the range, but we have hit our last target, so we have closed this advert because
Okay.
of the VIX is very violently high from around
Yeah.
uh, 5 6% each day. So premiums would increase, right? So that's the
Yeah.
reason we have hit our last targets. We closed.
Okay. Okay.
So you need to
Uh,
take care these weeks kind of things also. I mean, and as I already said that in avoid cases. So when this kind of events you are expecting, you would
mm,
better to stay away from this strategy.
yeah.
So we have actually in the positions while these market events are coming. So obviously those were affected. So
Okay.
these positions hit the last target.
Okay. And also, I mean, in the iron butterfly, usually, I mean, at least when I do, is
Hmm.
where I look at the VIX, VIX or the IV or whatever.
Right.
And then only I do, like, if it's above, for example, in Nifty, when I do, I usually do when it's above 15 or something like that. Do you have
Right.
any suggestion as to when to avoid this kind of strategies when VIX is below certain level or something like that?
Yeah, I mean, when VIX is all-time low, obviously we get very low premiums. That is not suggestible when VIX is around 12. Earlier, few weeks back, it was around
Yeah.
12 12.5 13, right?
Yeah.
So when VIX is around 15 to 18 range, it would be very comfortable range to do this kind of strategies.
Okay. Okay. Thanks a lot, Rambabu, and for explaining so well. And these rules are very nice. I mean, for any new trader who's coming into market and who
Yeah.
wants to at least paper trade these kind of strategies before
Yeah.
actually jumping into live market. I think these
Yes.
kind of
Yes.
strategy rules are very important to follow. And you
Yeah.
have nicely laid out all the rules.
Yeah.
And it's a very nice to follow this kind of rules so that there is a system for people to follow
Yeah.
and see how it performs in the market.
Yes.
Thanks a lot, Rambabu. And how people can reach you and where they can watch your videos or where they can take your courses if there are any. You can share that presentation uh,
Yeah.
that you have and talk more about that.
Yeah, I speak on, as you already said in the introduction, I speak in Ramwealth YouTube channel in Telugu and Pin Shopee YouTube channel in English. I'm not so active in English channel. Maybe in a couple of weeks I'll be more active. Recently, I have started option trading course for the beginners, especially in Telugu. That is available in finshoppy.com. Those who are watching this session, if they are Telugu guys, if you wanted to avail that, it is available with very low price, less than 1,000. You can avail that course, and that will be available in English as well within a couple of months.
Okay. So you can show the links in your presentation that you have so that people can
Yeah,
see
sure,
those
sure.
links. Okay, folks. So you have seen the contact details of Mr. Rambabu. So you can he has his Twitter handle. You can contact him there or in Telegram channel or on YouTube channel. There's one Telugu and English. So you can there are multiple ways to contact him and watch his videos and learn about more option strategies. And I personally watched his videos on YouTube and I found them very interesting. And that was the reason I thought that more people will benefit from this kind of option strategies adjustments. And that's the reason I invited him, uh, sorry, for the EDECNOCH. I hope all of you have benefited from this presentation and took away some learnings from these option adjustments on these iron butterfly strategies. Thank you, Rambabu,
Yeah, thank you,
and
Ravi.
see
Thank you
you
so
next
much.
time.
Yeah,
Bye.
bye.